Peter McGuire joins in with more details on that. Peter, what are you making of the trade overhang? Because that's pretty much been the biggest concern for global equity markets. We finally had a deal reached between Mexico and the US. The fate of Canada is still under question. But do you get a sense now that this trade overhang could potentially be behind us sooner than we would have imagined earlier?
Well, good morning, Samina. I think that now that you've got the Mexico deal with the US seems to be all sorted, yes, the Canada situation will be a work in progress. I think the general consensus would be that it'll get over the line, though there's still probably some, finer points that needed to be rigorously debated and settled. You've got to look at what's happened in the last 12 hours. I mean, hitting that S&P number over 2,900 is just shooting the ball out of the park. Very, very strong, and obviously, the momentum's there over that Northern Hemisphere summer. It will be interesting to see how it leads up to earnings season in October. But, you can't stand in the way of a bull market at the moment.
What is it that's driving these equity markets? Because there's no resolution between the US and China expected anytime soon. Worries still remain around trade. So let's not forget that while there may be an agreement between the US and Mexico, there's still no real clarity there. We had commentary coming in from Theresa May where she said the Brexit, of course, seems to be looking quite rough too. What do you think beyond earnings is driving the kind of liquidity into these equity markets? And I mean, how does one justify it? The reason I'm trying to understand that is to get a sense of whether or not the current rally that's underway is actually sustainable.
You know what, Samina, I think if you've got 7 or 8 years of absolutely free money, and that's what's been demonstrated by all central bankers across the world, and we're now starting to see, upticks as far as rates, but it was just that much liquidity, and it was the whole mindset was to reinflate asset prices, as been demonstrated in real estate prices. You've only got to look at what's, Mumbai real estate prices, and roll that across to every major capital across the world, or the greater majority, and it's just, absolute, growth beyond, I think, anyone's imagination. Hong Kong prices at record highs, and then roll that across naturally to equity markets, and that's been demonstrated by the S&P overnight. So there's the first part. The second part is, as far as the Brexit situation, I feel as though May's probably bowing to pressure from Brussels, and it's going to be fascinating to see how that plays out. I was listening to Nigel Farage yesterday, and when you hear of his mantra and what he was able to achieve, and then the Brexiters, and now looking at what May's doing, they're very much poles apart. So there are certain constraints there, and it's going to be fascinating how that, by end of year, you'll get a very, very different picture, I think, as far as, where the UK plays in the Brexit situation.
Right. Peter, overall as well, if you see historically, US markets have actually avoided the kind of doldrums that we usually see in the month of August. NASDAQ, S&P, all of them setting record high levels, and overall Dow Jones as well, a very striking distance. Now, last week we've seen the US markets enter their longest bull run in history. Now, the key question is, going ahead, are we expected to see some bit of volatility that could creep in, or till how long will this bull market run continue? And in this kind of a scenario, what are the key investment themes that one should be watching out for?
Well, the first part is as far as interest rates and what Jerome Powell's his forecasts and where the Fed runs over the next 18 months. The second part is naturally you've got a president that's, very much pro-business and very much pro-business for the US. And that seems to be a very different dogma compared to what, previous presidents have had as far as the US market. So Trump is very much get the deal done, sort out the economy, and just hit the numbers, and that's been demonstrated in the last 18 months. And a continuation naturally from Obama, but it certainly hasn't put a handbrake on things. It's actually sped things up. So I think that he's got a front and centre approach. He's not going to actually back down from growth, and he knows he's got his mid-years coming up, or midterms, I should say, coming up in November. And as far as he's concerned, he wants to see better and stronger numbers for the Dow and for the US economy and manufacturing, and make the US more competitive and more prosperous. So that's going to carry the world through. China's looking pretty good numbers. I was looking at their manufacturing forecast. They'll come out Friday, PMI running around about probably 51, 24th month of consecutive positive numbers over 50. So globally, it's number 1 and 2 are looking good. Everything else is coming along on the same ride.
Peter, what's the call on the dollar index? It's been 4 straight weeks, or rather 3 straight weeks of losses, trades at a 4-week low. Some believe it's a return of risk on trade. Others believe it was commentary from the Federal Reserve that the US will undertake rate hikes much slower than anticipated. That is, of course, playing out negatively for the dollar. In terms of the global dollar, what's the word? And more importantly, what happens to emerging market currencies, because they still seem to be losing flavor?
Well, have a look what's, since the inauguration, you went from 102, I think, or 103 US dollar index down to 88, 89. It certainly whipsawed around that sort of market. Now it's back at 95. If you look at the Indian rupee, you're now at 70, approaching 71. All the emerging markets, US dollar is just gaining strength, and I think that will continue. I wouldn't be surprised to see US dollar index hitting a 97, maybe possibly a 98 handle over the coming months. Depends again on interest rate rises, but I really think that it's got more momentum to the upside, considering where the euro plays and where a lot of those other first world markets and then emerging markets is a different matter completely. I don't think you can I don't think you can really stop the US dollar trajectory to the upside. That seems to have all the momentum, and again, it's backed by strong growth, and people are looking at the US as the principal market of the world.
Right. Peter, with regards to US markets as well, the GDP number is something which is expected. What's the expectation coming in there? And in turn, what's the kind of move that we could see with regards to where the dollar is concerned?
Well, as far as GDP, I think you're going to hit, again, very, very positive numbers as US. There is no doubt that, the president's, that's his whole agenda, is to raise that number, to get, continue that solid growth forecast. Inflation seems to be reasonably under control. And when you look at even crude prices, they're oscillating between that 65 and 75. They're not breaking out to 100. So it's not a bad thing as far as global inflation. Then you look at where the actual economy is situated, as far as those numbers, it's going to support everything else and bring everything else up. And that's, you've got strong numbers. Have a look at the population base globally. It's doubled in population from 1970 to now 2018. You've got twice as many inhabitants on the world, so that means more population, more eating of rice, all movement as far as commodities. And the demand picture is certainly growing. So that's the situation.
Peter, talk about crude. Of course, there's some support coming in for crude on back of, or rather ahead of US sanctions on Iran. In fact, a lot of people have given into pressure from Washington. A lot of crude buyers have actually already reduced orders from OPEC's third largest producer. And of course, more importantly, production from OPEC members and non-OPEC members is what's keeping the cap on crude prices. How are these sanctions on Tehran going to work out, and what could it mean for crude through September and October?
I think first off, as far as the situation with Tehran, that's very much a work in progress. No one can really ascertain the true value of what it does as far as those sanctions to the Iranian economy, other than probably the Iranians. There is certainly, from a compliance side, from OPEC, everything's, they're very, very much from a compliance side. They're restricting as far as barrel and production more than what they were forecast. The next part is you've got strong US production coming out. You've got all of the other global markets of very, very solid production. So I think that crude, there's nothing really to stop it trading in these sort of price points. I don't see anything really to, cause massive breakouts on either side unless you see something tremendous happen as far as weather outages from hurricanes and you're right in that period now, August, September, October. So that could be a weather outage. The other side would be is something happening as far as geopolitical. And I think the Middle East seems to be very much under control. Even the Syria situation, Iran, Iraq, and then ISIS. So there's nothing there. Venezuela's a basket case, which is very unfortunate for the population. But I just think it's going to oscillate. And we've got the next meeting in OPEC, or the major OPEC meeting in Vienna on the 3rd of December. and hopefully I'll be attending that one. And I really think that OPEC are going to be very satisfied, with the current price. I think that they've had a very good year. They've all banked very good profits, and it's been a very positive year for any oil producer. That's the situation. You're getting paid in strong greenback, and that's a plus in itself.